Welcome to the Daily Coin. My name is Rory, and today is Tuesday, January the 9th, 2018, and I have the very distinct honor and great pleasure of welcoming back to the show for the first time in 2018, Mr. Craig Hemke, and he is the founder and president of tfmetalsreport.com. Craig, welcome back.
Rory, it's always a pleasure. It's going to be a fun year, and this is a fun way to get it started.
Well, let's jump in and make it happen. Yeah, what I wanted to talk about is Iran and what's going on there.
Yeah,
and I wanted to just to kind of keep that in front of people because I think that there's some things happening there that are going to have some long-term effects. Venezuela with El Petro and the demise of the petrodollar and the rise of the petro yuan, because it seems like, and we'll just start right there, Craig. We'll just do that, and
it dovetails right into. I don't know if you remember last year, I talked a lot about the generally accepted narrative.
Yes.
This year it is the three major themes, and that whole discussion I will wrap into the three major themes probably repeatedly, and that is political risk, which isn't quite as obvious, but geopolitical risk, which is what you're talking about too, and then de-dollarization risk. And those are three things that I didn't even beginning to be priced in at this point in any market.
Market.
So,
and what's happening? Well, let me ask you this. I mean, as far as as you and I both report regularly, China moves slow. They're methodical. They try to look at every angle before they make any type of even the smallest of moves. And now all of a sudden you have this maniac. We'll call him Maduro down in Venezuela, who has decided to blow holes in everything and go ahead and release this cryptocurrency called El Petro that he's backing with oil and gold and diamonds. And he's released it. And which tells me that either this is something that he's been working on or somebody's been working on it for a long time, or it's something that he's cobbled together, in very short order, because it was just a few weeks ago that El Petro was first announced, and now all of a sudden it's here, it's on the market. And
excuse me.
Do you see that having any impact on what China does as far as the yuan benchmark contract, futures contract for oil, having any part of that? How do you see, if any, impact on that situation?
I don't know, Rory. That's a tough one. I mean, it's probably just all part of the deal.
Okay.
I mean, just all these. The first thing that comes to mind is death by 1,000 cuts.
Right.
And that's a cut against the dollar. Whether that's stuff that's being done behind the scenes, in cooperation with the Chinese or somebody else. I don't know.
No. I wasn't clear about that. I don't think that it was done in conjunction with the Chinese at all. As a matter of fact, I think it's the exact opposite. I think that Maduro just, as a renegade out here, just kind of willy-nilly doing whatever strikes him for the day and to maintain his power. But, China and Russia have been doing these long-term plays. And the question that I'm asking is that, will this have any impact on what these guys are doing, or are they just going to write it off and go on about their business?
I would think it's totally separate then in that regard. I don't think that impacts what the let's call it the BRICS, the Shanghai Cooperation Organization, the whatever you want to call it, the Eurasian Alliance, the Silk Road, the whatever you want to call it. I don't think that impacts it. If anything, recent history would suggest that Maduro is just asking to be bombed by doing that. Right?
Yeah.
I mean, look at what happened to Gaddafi.
Yeah, he's definitely asking for some democracy to be rained down on him.
Yeah, exactly. exactly. So, and given the sorry state of Venezuela, um, you know, a regime change wouldn't necessarily be a bad thing, I suppose, from the outside looking in. But nonetheless, we'll see how that's just another part of what's going to be a wildly unpredictable year, Roy. I mean, I think again the general consensus is that everything's just fine, man. Look at everybody's optimistic, and look at what's going on in the job market and all this kind of Dow 30,000 is next, and it may very well be. But boy, structurally things. I read something yesterday. Some Princeton economics professor did a study last year. I didn't even know about this. I read it in a magazine yesterday. Said that I don't know what it is, 20%. I don't want to misquote it. 20% of the group of non-working or underworking males, and the males not in the labor force, that huge group of people, whatever it is, 95 million people.
Yep.
20% of that group is due to like opium addiction, and they're on disability because of it. I mean, I don't want to butcher that. I should probably get the complete stat and read it accurately. But anybody can look that up. Just look up, Princeton economics professor opium labor study or something in Google, and you'll find it. I mean, it tells you just how utterly structurally screwed up things are.
And are we witnessing the opium wars in reverse? Are we witnessing the opium wars being done to ourselves? Because as you and I both know, the whole situation in Afghanistan is about opium and big pharma and these drugs that are blanketing our planet.
Yeah, you wonder. I would also look at it, Rory, as almost kind of and these analogies have been made now for over a decade, but it's almost it's that fall of the Roman Empire stuff.
Yes.
Where everybody just sits around fat and happy and gluttony and sloth and everything else that goes with it. And all you got to do is watch the Golden Globes to see that on display, right?
I try to avoid that kind of nonsense. I get enough of that from Mark Dice.
Yeah. I mean, and it's just all part of that structural decline. And again,
yes,
what the disconnect is, we've got whatever it is, 95 million people not in the labor force.
Right. But
and that as a denominator is why the unemployment rate is shown at 4.1%, as if that's somehow happy. But where you can plainly see the disconnect is there's no rising wages. Because if there really was this total demand for employees, that everything was growing so quickly that we just can't hire people fast enough. Well, one of the ways you incent people to come to work for you is to offer them more money than the other guy.
Right.
But we're not seeing rising wages. I mean, they're creeping along at 2.5% a year. And that just underscores that lie. That
or we see a forced rise in the minimum wage.
Yeah, that too. So, but here's the thing, though. I shouldn't say here's the thing. That's a wrong way to say it. Here's something else that's on my mind. How about that? Why the hell? I mean, at this point, it doesn't matter. The market does not hold anybody accountable anymore. The bond market certainly doesn't hold anybody accountable. The Fed, the Bank of Japan, the ECB, the Swiss National Bank, the Bank of England, they all stand at the ready to just print as much of their fiat currency as they need. They'll monetize as much of the debt as they need. And so obviously it doesn't even matter anymore what the total level of the debt is. It doesn't matter anymore what the total amount of deficit spending is. And so then at the end of the day, you just see how quickly things are declining. And then it's just like, well, why does the government can do anything it wants for people? But yet they still have these political arguments. I mean, go back what it was a month ago, right? When they had the whole tax cut thing and all that kind of jazz.
Right.
And they're debating in Washington about how, we're going to cut. Cut them to zero because it doesn't matter. Right?
Right.
The government can spend as much as it wants and borrow as much as it wants, and the Fed and everybody else stands ready to just buy up all the debt. So it doesn't matter. And then they sit and argue about, what was it, like $9 billion or something for this health insurance program for little kids whose parents can't afford anything? And they argue back and forth about how well, we can't afford this. Oh, we can afford these trillions of frickin' dollars in tax cuts, and we can afford, the carried interest thing for all the hedge fund managers. But hell's bells, we can't afford $9 billion for health insurance for little kids. And then all of a sudden, it's the Democrats who are bad. No, it's the Republicans that are bad. And everybody sits there and argues back and forth, just trying to, again, they wedge everybody against each other.
Right.
When they can afford anything they want.
Exactly.
They just choose not to.
Right.
And it just create issues to divide everybody. And it's just, anyway, and I'm not, believe me, I'm not all in favor of just abject, Paul Krugman, spend as much as you want and all this kind of stuff. I think that's, again, in a normal world, that's horribly fiscally irresponsible. We don't live in a normal world anymore.
No, we don't. I mean, and as far as the spending, like what you were talking about, all you have to do is drive around. You don't live where I live, and I'm sure your roads where you live are in as terrible condition as they are where I live. And why is that? Because we have trillions, I think it was a $600 billion raise that the bomb makers received this year. They got a big fat raise. My roads didn't. Yeah. My infrastructure, my water system didn't. None of that got a raise. But we got plenty of money to kill people. We can kill as many people as we want, drop as many bombs as we want, build all the war and death machines that you want. But helping a bunch of little kids that need health,
right,
that need attention for their health, no, we got no money for that.
That's right, Roy. And again, that's again, in the real world, economic decisions like that would have to be made. But It's all phony at this point. They try to tell us, oh, well, yes, because we're making these decisions, we can only bullshit. You can do whatever you want at this point.
Right.
The central banks have already printed $15 trillion worth of their currency in the last 10 years. That's what we know of. That's the overt stuff.
That they will tell us.
Yeah.
Doesn't count what they don't tell us.
So, but anyway, so it all sets up for, I think, a very interesting year.
Yes.
And you wonder when, the piper will need to be paid, whether that's in this year or not. I don't know, but eventually it will. If just simply creating money led to prosperity, creating cash led to prosperity, well, then it would have worked the 500 other times that it's been tried.
Right. And not once has it worked.
Right. So we'll see.
Now, and speaking of which, I want to look at gold, because gold and silver both, for as abysmal as the U.S. Mint sales were in 2017, gold and silver are enjoying a nice ride higher here. But we kind of knew that was coming because of the Fed rate rise. Once again, gold has responded accordingly for the last 2 years, and certainly that was anticipated again this year. And silver's coming along for the ride, and you had mentioned optimism a minute ago. There seems to be a lot of optimism in the precious metals community for both gold and silver in 2018. I know that I'm very optimistic about both gold and silver for 2018 up through like 2021, 2023. I think that they're both going to continue to rise for the next several years. What are you seeing?
Well, I think before I answer that question, I think it has to come with this kind of blanket statement first. The system itself, the pricing system itself, is an absolute, utter fraud, sham, and scam.
Yes.
Okay. So recognizing that, and recognizing that it is under that umbrella that we have to work for now, then we can begin to address, what drives that scam of a price. Because what has happened in increasing amounts ever since 1975 is essentially alchemy. The world relied upon actual physical metal for the discovery of price through the end of the London gold pool all the way up to when futures were started on January 1 in 1975. Since then, investors, if you will, institutions, whatever, worldwide, have been scammed into believing that some type of digital paper, whatever you want to call it, gold exposure is just as good as the real thing. Right? So everybody accepts this. Well, I've got this unallocated gold, or I'm told I hold gold at the LBMA, or I've got, my shares of the GLD, or whatever it is. And they accept that as the real thing. And so you watch the price that is shown on Bloomberg or CNBC, and for the sake of this discussion, that's the price we'll discuss. But that price is only this kind of manufactured price that's determined, by the demand for this exposure. And then the bullion banks, which operate primarily in London, but around the world to flow physical metal into that artificially derived price, that's how the market operates. And so at the end of the day, then, as long as this current system prevails, then we have to look at what are the underlying drivers of demand for that gold exposure. And so anyway, that's a long answer because you mentioned demand for physical at the U.S. Mint, right?
Right.
I mean, that doesn't mean, Rory, I'm sorry, but that doesn't mean jack. I mean,
well, no, I understand, but it's one of the windows that we have
right,
retail consumer. So,
and that's not, and I don't, and I know you understand that, and believe me, that's not in any way meant to disparage your point of view. That's meant to disparage all these dopes out there that do think that somehow matters. That do think, oh, well, the World Gold frickin' Council, well, global demand trends. And even their data is so skewed, it's right. Utterly useless. But, global demand trends, and thus that explains how gold did. No, it doesn't explain anything. And so, anyway, so we have to look instead then at how that digital derived price then is discovered, what drives that, and then try to note if the banks then will have trouble sourcing and flowing physical metal, into that demand, actual real physical metal. It gets back to this EFP thing, Rory, that I've been talking about now for the last 6 weeks. This exchange for physical,
yes,
thing, and old Harvey Organ raised a stink like he likes to do, and I don't have any base. I don't know if I wasn't going to get too excited about it because I don't have any basis for understanding if, what has been occurring for the last 6 weeks is unusual or if it happens all the time, because in the last 6 weeks, over 1,000 metric tons worth of COMEX contracts, something like 340,000, have been moved off of the COMEX exchange in New York and exchanged for physical somewhere else, most likely in London. I mean, that's a lot, right? 1,000 metric tons.
It's a lot of gold.
300 some odd thousand COMEX contracts, while COMEX open interest never changes. And it's all part of this scam. Well, then I come to find out, I got a chart from Nick Laird at Gold Charts R Us that shows, well, this is not unusual at all. And that's a perspective. That's what I've been looking for, to try to find out if this is unusual or not. And as it turns out, over the last couple of years, 16 and 17, about 6,000 metric tons of alleged gold has been shifted off of the COMEX into physical delivery, if you will, unallocated delivery, in places like London. 6,000 metric tons each of the last 2 years, where that's
Lord.
Double what the world produces in a year, right?
Right.
If you just last year alone, let's just say all of that or most of it was done in London, because the gold stocks on the Hong Kong exchange, you can readily look that up. They only show about 600,000 ounces. So it almost would be impossible to be doing it through Hong Kong. So let's just say almost all of it's in London. Okay, that's, again, 6,000 metric tons. If you include in the London LBMA vaults, even if you include all of the Bank of England's gold and all of the gold that is allegedly set aside and held by the custodians of the GLD and the other ETFs, The entire LBMA vaults only holds 7,500 metric tons. So what's really going on here, right?
Really?
And again, I did this math yesterday. It was it's like 2 million COMEX contracts that were moved off the COMEX and exchanged for physical in London. 2 million. I mean, the average daily open interest is about 500,000. And so everybody, the system apologists that all think, oh, this is fine. This is a fair and rational price. And you're not sophisticated enough to understand how all this works. Thereby you rely on conspiracy theories. Well, how in the world is that? How are you dealing with actual metal? My problem again is this alchemy that the world just accepts that somehow buying contracts in these banks doing this circle jerk to make a market and pretending to take delivery and all this stuff to show a price for gold that then they try to manage physical into when they really have to do it, that they can transfer 6,000 metric tons of gold around, shift it off of the COMEX, do it in London, and then everybody just says, yeah, that's fine. What? That's not fine.
No.
I mean, that's just fraud. That's a scam, like I said. And that underlines what a total sham and bastardization this pricing system has become. So again, we can talk. I've talked now for 5 minutes, and I haven't even begun to answer your question.
No, you're answering it perfectly, because I didn't know that there were 6,000 tons that were missing, and I'm going to call it missing because nobody knows where it is and nobody knows where it came from. You can't just kind of magically produce 6,000 tons unless Bix Weir's theory of the chocolate mountains being filled with gold is true.
Yeah,
it's not true. Okay,
yeah.
So
where
did it come from?
You've got how many different parties, whether they're institutions or central banks or whatever, that say, yeah, see, I got this right here. It says I have X thousand ounces of gold. I have it right here. It's held at the LBMA. Well, hell's bells, Rory. How many different parties are there like that?
Right.
And they all go around believing, oh yeah, I'm fine. I got my gold exposure right here. If the world actually had to exist and price metal off of the actual above ground, real physical metal there, it wouldn't be $1,300 an ounce.
No, 13,000.
And it gets back to like this scam of the COMEX. We've been monitoring on my site. Fortunately enough, we were able to get all over it in December. We looked at the COT structure, the massively oversold readings within the market, and got long back before the FOMC, and have profited nicely over the last 4 weeks. And we knew that it was pretty clear running at least up to the 200-day moving average, and then from there, that's when the speculators, which is mainly all done by machine and algorithm, you get the price to be positively positioned versus some of these key technical indicators like the 50-day or the 200-day. Then the machines just kind of take over, and they see that positioning, and they cover their shorts and they go long, and anyway, blah blah blah. Since the price of COMEX gold moved through the 200-day moving average back on December 26th, okay, everything was. Price was rallying nicely, but open interest was pretty stable. On the day of the FOMC, open interest in gold was 456,000. By the time price moved through the 200-day moving average on December 26th, closing open interest that day, 456,000. But then all of a sudden we get through the 200-day, these spec machines start buying, and they're going long and long and long, and price keeps going up. Well, guess what? Since this is through Friday, because I don't have Monday's open interest numbers yet. But through Friday, in just the 1, 2, 3, 4, 5, 6, 7 sessions since we moved through the 200-day, open interest in gold has gone up by 95,000 contracts.
Ooh.
From 456 to 551. So again, I've written about this before, if the amount of derivatives even on the COMEX was held stable, if that float that's available like in a stock, if that float was held stable and that was the only amount that was able to buy every day, and that to determine price, price would have to rise to the point where sellers of existing contracts were willing to sell to all this rushing in of buying spec interest, how much would price have risen? But instead, the banks just simply create all new COMEX contracts. They just create them from thin air. And 95,000 of them in 7 days or whatever I said. And they feed them to the specs. And so you want to really boil it down. Just since the first of the year, in the 4 trading days last week, Tuesday through Friday, price of gold was up 1%. Hey, you know what? 1%, that's great. I'd take 1% every week for the next 2 years. That'd be wonderful. Regardless, total open interest, the total size of the float of derivatives, was up 12% in those 4 days. So again, what are the dynamics that are really driving the price? Is it physical demand, actual physical demand, or is it this scam, right? This paper scam. And so that's all part of what we have to. So at the end of the day, what we need is enough demand, even for the gold exposure, that it gets out of hand. It gets away from the ability of the banks to manage it. That's what happened in silver in 2011. You and I have discussed this, I don't even know how many times now, Rory. That last month, April 2011. Everybody now, the revisionist history of, all the dopes is, oh, that was a big bubble. As if every shoe shine boy and taxi driver was buying silver. That's not what the data showed at all. What the data showed was that last rally in April of 2011 was all short covering of the banks. They were getting squeezed and panicking as sentiment just kept, people were excited. There were buyers had driven, the specs had come in and pushed price up all the way through January and February and March. And we went through the 20s and into the 30s. That last move from 38 to 48 was spec short covering. And so then what happened? You get the Sunday Night Massacre, you get 5 margin hikes in 9 days, and all this happens. Anyway, the moral of the story is if you can get that level of demand for the metal exposure again, not the physical, but the actual, I got to have this under whatever conditions, the global economy, or just a rush of money, then that's when we can finally really get change. And I'll get one last component to that answer. Look at what has happened in these cryptos.
Right.
Look at what has happened in Bitcoin. And I only say that from a amount of global cash perspective. We said earlier about the $14 trillion worth of currency that's been created in the last 8 years. And it all sloshes around the planet. That's why long rates keep going down, because it's always constantly looking for a home, that kind of stuff. Well, that's all part of that money is what's flowed into cryptos too.
Yep.
Okay. All right. Let's just say the next time, because it's coming, the next time there's a move into commodities and silver specifically, and part of that 14 trillion gets directed into the, whatever it is, $17 billion silver market. I mean, it could get out of hand really, really fast. I'm not saying that's going to happen in 2018, but that day is certainly coming. And it's going to make 2011 look like a warm-up act.
Well, and I'm glad you mentioned the cryptos, because my challenge to the crypto crowd over the past couple of weeks has been for them to take some of their money and to do exactly what you just said. Go and attack those markets. Go and attack. If you want real change to our system, then take your profits from your crypto digital blip on the screen, take those profits, convert them into fiat currency, and then go and attack. And I mean, all out attack the COMEX and LBMA and just start opening contract after contract after contract. You've got the profits to do it. Go and do it. Go and make real change in these markets and overwhelm them. Period.
Right. And that's what needs to be done. You and I talking about it won't necessarily, but what will do it though, and this is what we're then waiting for, and we're getting very close to, is kind of a virtuous cycle of higher prices and building confidence in commodities in general. And you can see this now, whether you're looking at copper, which is now broken out to almost 4-year highs, crude oil, which is broken out to 3-year highs above 60 and looks to rally. As the commodities sector in general gets recognized as being it's already recognized as being about the only undervalued sector. But as it begins to break out and people recognize it breaking out, and it's gradual at first, and then as we go through 2018 and the dollar continues to fall, and copper continues to rise, and crude continues to rise, whether it's off a dollar weakness or the petro yuan thing, or whether it's geopolitics and war in the Middle East, whatever, all of this starts to create this virtuous cycle and a fear of missing out. And then that's when things could really start to compound and accelerate. And that's when you get what you're talking about, Roy, is that these big moves of hedge funds and the like, or other institutions or whoever's made money in crypto, and they go, hey, this is a pretty good opportunity to make money too.
Yeah.
And again, it won't take the amount of cash available to flood into this digital metal exposure and ultimately overwhelm the ability of the banks to manage physical metal delivery at these prices that are soaring. Yeah, that's what we're waiting for.
Yes. And I think that day is coming. Is it coming in 2018? Maybe. Coming 2019? Maybe. I don't know.
Yeah.
My crystal ball is broken and it's permanently broken, so I don't know what's going to happen tomorrow, but I know that math still works. 2 plus 2 still equals 4, regardless of what Common Core says.
Yeah, right. And Roy, that at the end of the day, that's what matters. So we talk about where's price headed, and I think prices are headed higher. Gold had its best, even the COMEX digital gold had its best year since 2010, right?
Yep.
And now at what is it this morning? 1310. So it is 8% away from 1400. And 1400, I mean, even Stevie Wonder can see that above 1400 would represent a long-term breakout. And that's the first step in this virtuous cycle of momentum and higher prices and getting people interested again in owning even digital gold. Is this a breakout on the chart? Well, look at that. You can clearly see the bottom was in, at 1050 2 years ago. And then look at these higher lows and higher highs. And oh boy, this, and the 99.9% of the investment community that doesn't understand what you and I understand, just in their own right goes, oh, this looks pretty good.
Right.
And the thing builds on itself. We're only 8% away. And that's where the dollar weakness, all these other things that are going to happen this year will make that happen. Silver moving back up grudgingly. I mean, being fought every step of the way in this management by JP Morgan and others. It gets into the 20s. And all of a sudden it's 22. And, I'm not saying it's 22 by next week, but eventually these things are going to happen. And then this is why you own the physical metal. Because as we said, there are, untold numbers of paper claims for every available physical ounce.
Yep.
100?
At least.
Even if it's 50. Like this scam of the EFPs, all these people, for what, to the extent that they're actual normal institutions, not just the banks. I mean, if you think you've got gold and it's vaulted in London, or you've got gold and it's vaulted through the GLD or whatever scam that we're talking about, and push comes to shove and you want to take delivery of it, and you're told, sorry, you had exposure. Didn't you read the fine print?
Right.
Well, those people are going to be pissed.
Yep.
They're going to have to go out and actually buy it themselves on the market.
And then they're going to have to find a tough market to buy it in.
Right.
Not saying that they're not going to be able to find it, but.
And so I bought Bitcoin. I was just lucky enough, stupid enough, whatever, to a year and a half ago to finally stumble into buying a little bit of it in the summer of 2016. And, so what, a year ago it was, let's call it 15. It wasn't even 1,500 yet. It was battling about 1,000 a year ago right now. But let's just call it, for simplicity's sake and for the sake of what I'm attempting to accomplish here, let's call it 1,310 a year ago. And now you look and it's gone to almost 20,000 and it's still up around 14,000, and people say, that's astonishing. Well, I bought it because I knew the actual supply demand dynamics of Bitcoin were it made a lot of sense, so I bought some. Well, what I'm telling everybody now is the actual supply demand, physical supply demand dynamics of gold and silver are basically the same in many regards. And so if Bitcoin can go from 1,300 to 13,000 in under a year, well, that's the kind of thing, as people recognize this supply demand dynamic and there's all that kind of stuff. Well, the same thing can happen to gold. It really can.
It really
And
can.
so that's why if you recognize, what has taken place, what the bastardization of this price is, the system, and what a scam it is.
Right.
That's why you just keep buying. You buy, oh, there's no shortage because I could go to my local coin dealer and buy myself a Silver Eagle anytime I want. Yes, you can, and you should. Go for it. Just keep buying a little bit all the time. Stick it in your safe.
Yep.
One of these days, it's going to go just like Bitcoin. And you're going to benefit. It's the insurance aspect that you're going to benefit. You're actually going to profit too. How about that?
Yep. Insurance and profit. I like it. It's a good combination. Last question, Craig, and then I'll let you get back to your morning. Something that I've been thinking a lot about for a couple of months now. You're the first person that I'm actually going to ask of this question, and that's about the oligarchs. And this is pure speculation. Cryptocurrency stole just about every headline available in the second half of 2017.
Mm-hmm.
I think that that's by design. I think that there's a reason for that, but that's not what I'm driving at. Gold and silver that, excuse me, that you've just so eloquently explained how all of this could possibly and should play out. Do you think that the oligarchs are still acquiring gold and silver? Do you think that the monetary masters of this world, is gold and silver still part of their game? Do you think that it's how do you see that? I mean, is gold and silver still has it become something that's antiquated in a digital world, or do the real money masters still see it and hold it, and it's coming back to the monetary world where it belongs? How do you see it?
It's not antiquated, and yes, there's a reason why gold and silver have been money for millennia, and that's not going to change. There may be maybe cryptocurrency as a way of making transactions or saving in something that isn't constantly being devalued. I mean, there's value to all of that, right? Or the oligarchs. I guess you mean by the Western oligarchs, the bankers. You mean the masters of industry, that kind of stuff. Is that what you mean?
Yes.
I don't know. I couldn't even begin to speculate as to whether they are buying, continue to buy. I will say though that at that chain of custody, that we've talked about, if there's 100 beneficial owners for each ounce, who's the winner? Who's the 1 ounce that gets the ounce? That's going to be them, right? That's going to be the central bank. That's going to be the big banker. That's going to be, they're the ones that are going to claim, oh no, we are the ones that have the clear title of this. We are the rest of you didn't read the fine print. You're screwed. And so whether they're still accumulating that kind of stuff, people always say, well, they're running the price down, so they can get as much as they can before the system collapses. Whatever. I have no idea. But when it all does finally correct on it and collapse in on itself, the people that do get their orders filled, that do get to go from unallocated to allocated, will be those oligarchs, as you call them. The regular folks, even the regular investors, hedge funds and stuff, they'll be the one that get the shaft.
I agree with that. And I don't know if you follow J.C. Collins over at Philosophy of Metrics or not.
I've heard of that. I've heard of him, but no, I don't.
He's still on the fence on whether or not gold is actually going to rise or if gold is going to fall as the system begins to, well, it's already beginning, but as the system resets and we move from current paradigm and the new paradigm comes into full view, which we're in that transition period right now, which I don't think there's a whole lot of people that would argue that. But do you think that, I mean, if gold were to come back to the table as currency, not just money, but as everyday currency, do you think that the $42.22 that's on the books at the Federal Reserve, would that be more in line with what gold would be valued at, or would it be more along the lines of the 10,000 or 20,000, whatever Jim Rickards has been saying?
Yeah.
Would it be more along those lines? Because neither one is going to satisfy what's out there, period.
Is this Collins character some kind of deflationist like Harry Dent or something?
No. It's just he's not sure which way that the people are going to take, the money masters are going to take it.
He's just
not sure.
To me, that's ascribing too much faith to the current system as being an actual price. You know, if you're going to accept,
he's not said any price at all. That's okay. I'm just going.
Well,
I'm throwing those numbers out there because that's what we have to work with.
Right.
What we have is the Federal Reserve's price of $42.22, and then we have the speculation of somebody like Jim Rickards who's saying 10,000 or 20,000, whatever the number is.
Right.
It's some ridiculously high number from where it is currently. It's ridiculously low on one side and ridiculously high on the other. And neither price will satisfy the current global debt monster that we have on the books. Period.
Right.
It doesn't matter. Right. Won't satisfy it.
Right. So if 35 wasn't a price and 42 isn't a price, that's the market itself, if you will, is telling you that that's not the price.
Okay.
And so the Fed trying to then come out and say, no, really, it's 42. Everybody else that actually holds metal is going to tell you that's not the price. And so now I've seen Rickard say now would be the ideal time, at least from let's call it like kind of a covert QE. That's not even the right term, but now would be a great time because almost every single central bank would benefit if suddenly the Fed came out and said, yeah, 42 is not right, but 4,200 is okay. Because you'd revalue all the gold and it would fatten up balance sheets, central bank balance sheets and all that kind of stuff. So I don't think going down to 42, again, that ultimately is disinflation, deflationary to do something like that. And anyway, I don't think that's right at all. And again, it gets away from the notion, all the stuff that you and I have just talked about for the last half hour, in that gold has been alchemized since 1975. I mean, all the wizards and their magic potions and pots from medieval times couldn't pull it off, but the bankers did 40 years ago. And they managed to turn, ether, nothing into this confidence scheme of, yes, I own gold. No, you don't. You own a piece of paper that says you are exposed to the price, but you don't own gold. And so when push comes to shove, all of this money that's been created, since 1973 and since 2008, all of this cash has been created around the world with no anchor to it at all, eventually goes sloshing toward a hard asset, the supply of which has not increased as rapidly as the supply of fiat currency.
Right. Not by a long shot.
Therefore, the exchange of fiat currency for this hard asset drives the actual value of that hard asset up in price. Well, you're an idiot. Look, the price is only $1,300. Yeah, because that's the price of the digital exposure that the banks have convinced everyone is just the same as gold. And when it all collapses, and when that confidence scheme collapses, which could occur before the whole system reset stuff that everybody talks about, when just simply this confidence scheme collapses due to a rush into silver exposure, like we talked about.
Yep.
When the confidence scheme collapses and everybody wants their actual physical stuff and they realize that The physical is scarce. What was plentiful were these stupid derivative contracts. Hell, the banks can create them from thin air, as we've seen in the last week. But what's the actual metal itself is scarce. And so all of this fiat that's been created since 1973 or since 2008, was that goes chasing a limited supply, 800 million ounces of new silver every year, whatever it is, 2,700 new metric tons of gold every year. All of that currency that's been unhinged and created from nothing in the last 4 or 5 decades, when that goes rushing for this very small quantifiable amount of actual metal, the price doesn't go to 42. It's just the math economics just doesn't work that way.
Well, I don't know how math works, excuse me, in these ivory towers, or if it does work. I'm not sure, what the group of 30 consider math, if they're using Common Core math, or if they're using actual math, or if they obviously are using some kind of hoodoo math that I'm not familiar with, because none of this stuff makes sense. It doesn't add up. None of it adds up. So they're obviously using, an abacus or a calculator that I am not familiar with. So
right.
It's
then the scam continues.
Continues.
And a lot of folks have an interest in keeping the scam going.
Yes.
Whether it's not only just the banks, the hedge funds, everybody that's wealthy, everybody has their beaks being dipped in the scam.
Yep.
And that trickles down through the media, through politics and everything else.
Yep.
But it's like anything, like we said, if simply printing cash and saying that this was right, or printing contracts and saying that this is the real thing, if that had ever worked before, even if there was one time that it worked before, you could say, well, back in the 16th century, they tried this with the Danish kroner, and it worked out just fine, and everybody benefited. And Denmark began to be the world's largest empire, and it continues to this day. No, there are no examples of it ever working. None. And so, therefore, I feel pretty confident that this ain't going to work either in the end.
So you're going to stand by debasing the currency is bad.
Yes.
Okay.
Yes. So we'll leave it at that.
Well, Craig, I certainly appreciate all your time, and I'm glad we got to end on with a little humor there. It's always a pleasure speaking with you. It's always a lot of fun, and we always learn. I learn a lot, and I certainly appreciate all your time. We've been speaking with Mr. Craig Hemke, who is the president and founder of Turdville, which is found over at tfmetalsreport.com. Craig, tell them all about what you got going over there with your subscription, with your community. Tell them all about it.
Well, the community is what I'm most proud of. Everybody respects each other, and I don't think that, and this isn't just me talking. I get this feedback on the site all the time. Everybody treats each other. It's not like any place else on the internet. Really people don't call each other names and lash out. And we recognize, we're all in this together. And so though there are differing points of view, the information provided within the community, I think, is just second to none. And I can leave it alone over the weekend and come back, not look at it from Friday to Sunday, and then scroll through a couple hundred comments and see everybody just getting along just fine. And I think that's what really makes it unique. Now, to play along and to get, whatever value my analysis has, it's $12 a month if you want to really be a part of it. And that helps me keep the lights on, pay for my servers, and pay for my healthcare premiums for my family. God. Anyway, so I invite everybody to check it out. I think it's a pretty good value. The feedback I get from my subscribers is that they're with me to the end. They can't even imagine not being a part of the site for just $12 a month. tfmetalsreport.com. I invite people to come check us out.
I would agree. If it is an invaluable service in what you and the community provide to the larger community. It's really unbelievable. I love it, and I've not been as plugged in over the holiday as I should have been, but that's going to change. I'm going to get back into the community. I've got to, because I've missed out on some very important information, and I'm sorry to say that. but I love it.
Okay.
Wow.
We'll let you off the hook this one time, Rory.
Well,
Well,
Craig,
I appreciate the kind words. One last thing I just would add. I think we were prescient in our analysis and diagnosis of how 2017 was going to play out. I mean, I take a lot of grief from people saying this guy's been wrong since 2011. As if everything I ever type is just like 100% wrong. We did a pretty good job last year, and recognizing that the dollar was going to go down, not up, and that interest rates were going to go down, not up on the long end, and that was going to be beneficial for gold. And gold had its best year since 2010. And now, as we head into this year, we see several major themes that are going to impact price. Yeah, it's going to be up and down. It was up for a couple of days and now it's down today, that kind of stuff. But in general, things are really shifting in our favor, and it's going to be due to a number of factors that, frankly, in early January, nobody's really paying attention to. It's going to be a good year, and I think you get that kind of stuff on my site that you really don't get anyplace else.
would agree wholeheartedly. And Craig, with that, have yourself a wonderful afternoon. I will see you around tfmetalsreport.com, and I look forward to speaking with you in the not too distant future.
All the best, my friend. It's going to be a wild year.